Good morning. Welcome to Risk Neutral Trading. This is my virtual trading journal. Making sure this thing is working here. There we go. Yeah, seems like everybody's on board. So the intraday margin was raised to 25% again because of PPI. It's a typical story, and it's back to normal, so it's reset. At the moment, we're looking to open gap low. We were considerably down 20 handles, actually, on that report. So, yeah, this is my virtual trading journal. The thing here is, the premise is that I don't multitask well, so this is perfect. Everything I see on my screens, both Bookmap and IRT, are captured in the video, and then my voiceover here provides insight as to what I was thinking at that moment. I trade live here on Bookmap. This is a live AMP account funded by me, live, trading. And IRT, I do back testing and forward testing, but I do not push out of IRT live to trades because I'm not that I'm not that confident in the way I've coded up IRT. It's a bit more complicated than Bookmap is as far as trading goes. So, yeah, it's important for me to say that my intention here is not for financial nor trade advice. I'm not licensed to provide that, and I have no intention of it. But I do trade, as I said, I trade live, and I trade live real time, completely transparent, and completely accountable. So I will be, if a trade signals itself for me to take a vetted trade, then I will. And I will do it live here on the stream for the record. It's my virtual journal, after all. So that's the point of this. If it's helpful to someone else what I'm doing or not, then that would really be great. That would make me feel good. So here we go. Let's get on with, I think that covers the important stuff. Oh, there's a disclaimer in the description here. Please read that. That's important. Legal stuff, right? So here we are. The first thing of the day would be the numbers, I guess, and that has been the biggie. Here we are in looking to open gap down. Here was the report. There's yesterday's low. The way I look at a gap is the previous RTH session low or high and how that compares to the current or upcoming RTH session open. So if we opened right here, right now, that would be a gap low. There's the previous RTH low, and there's would be our gap. Our gap high. I'm sorry. I've got this wrong. I'm sleepy here when I did this. Now, these are just markers that I put in case, right? When I walk into the office around 6. And that's how I flag them. Anyway. There we go. So let's get on to the reports, even though we pretty much know what they are. The news sources that I use are as follows. This is investing.com, which has been my go-to for a long time. I like I think it's a clear, easy to understand presentation for screen snapping and putting into Discord or somewhere. So that's one reason I like it. First, let me say that this is a free version. That's why there's ads all over the place. My theory here is that with any of these sources I use, I always use the free one so that anybody coming through the stream or following the stream can have access to the same resources. There's nothing I can do about paying for Bookmap or IRT. There's no way to get around that. You have to pay for them or watch my, Bookmap, I guess. But another thing, a couple of other important parts about both of the news sources are you can filter them for wherever you are in the world and whatever reports you're interested to watch. In terms of investing.com, they only report traditional economic numbers and events. They don't pick up through the day, Trump's going to have a signing, or there's a press conference, or somebody's going to say something. They don't pull that stuff in here. So that's an advantage and a disadvantage, both, I guess. And another thing that I like about investing.com, notice how the event title, if you hover the mouse, turns to a link. You can click that link and go find out about the Chicago PMI and what the previous releases have been and those kinds of things. That doesn't exist on the other news source I use, which is Financial Juice. We are also in earnings season. Now, this is a Friday, so it should be pretty light. That's just the earnings releasing today. Look at that. Isn't that something? And this is Friday. This is a light day for earning. We had NVIDIA out on the 25th, which was a big pop. You can see it clearly on any chart. A miss. Well, they didn't miss, but nobody liked the forward guidance, I guess. And that was the last of the Mag 7, I believe. So the other news source I use is Financial Juice, and that's this one. Similar calendar or docket feature here. Here we go. You see here? Now, this is one of the reasons why I track and like Financial Juice. You'll never see this on investing.com. But they have just pulled it in. This was not here 30 minutes ago. They've just pulled it into the calendar because obviously somebody has released that schedule of his. And I'm not saying anything political here whatsoever. What I'm saying is, unless you've been living under a rock, you know that in this present environment, any kind of things, especially Trump, typically Trump, speaking or a tweet can have a huge impact on our auction. Traders, we are basically risk managers. If you're a serious professional trader, it's risk management. You're not a gambler, you're not a gunslinger, you're a risk manager. And your primary first responsibility is to preserve your account, and the way you do that is by risk management. Okay? That means you identify any potential risks. We knew years ago that this morning at 7:30, PPI was going to be released. That's a risk. We could plan that. We could mitigate that. We know that the first Friday of every month at 7:30 in the morning, we're going to get non-farm payroll. We should. This administration has had some problems doing that. Those are risks that you can make a risk plan for and mitigate. This kind of thing, unless you've been living under a rock, these kind of things can have a severe or critical impact on our auction. So I'm really, really happy when they pull those into the market. Now, I would have not had any consideration or any thought about 12 o'clock today. I will definitely not be in a trade at 12 o'clock today. That's risk management, okay? Over on this side is more of a squawk box event, so just kind of a running total. Those are the news sources that I use. And let's get on now to the pre-market after that. Dialogue. But it's really important. I don't know how to stress it and not sound negative. I'm not. I don't care who you voted for. None of your business who I voted for or if I even voted. But we're traders. We're traders, which means we're risk managers, which means we need to know about that stuff. Not long ago, Trump tweeted at 10 o'clock on a Friday morning, and the market dumped 229 handles. And the best part was what he was mad about. A tweet now, not a speech, on Truth Social or whatever his thing is. The best part was what he was mad about had not happened, and his reaction or retaliation for that thing that didn't happen either. So basically it was a non-event, a tweet and the market dumped 229 handles. That's critical unidentified risk, and that's why I'm so aware of it. And I think every trader should be. Okay, so here we are. Here is the IRT. First of all, in all of my charts, you can see in the header the chart name, which is meaningless to anybody but me, the instrument, the type of chart, the periodicity, and the session. This is a micro ES Renko, micro NQ Renko. This is a daily candlestick, micro ES, and it's the session right now is the RTH session. This is my micro composite or high time frame chart. And what I do here, wherever price overlaps, I draw a volume profile around it, and that constitutes, air quotes here, my micro composite. You'll see that we had the big gap up day before yesterday. They didn't even remotely consider closing the gap. That means that's the end of my micro composite. The micro composite volume profile quit right there. The high and the low and I remove all the high and low volume nodes because it's no longer the active micro composite. Yesterday or day before yesterday, there was nothing. Yesterday we traded here. So I started a new micro composite. We are looking to open gap low down here. There's that little nub, means where we're trading right now. This is the ES market profile. I don't switch it back and forth. I also plot the same configuration for the minis. Now, these high and low volume nodes from the micro composite push automatically to bookmap. That's these red and green lines, which just mark the high and the low of the volume profile. The session prices here also push automatically to bookmap. Excuse me. What are we doing for volume here? Well, look at us go. 147% volume for this time of day based on that number. I don't know whether you're familiar with it or not, but when there's about 4 events, then when they're going to be released, the CME raises the intraday margins from like $500 if you're trading the minis to the carry, which is it goes up to 25% of the carry volume. So a mini for normally you trade for $500 intraday is now 55 or 5,900. That starts at 1,700 last night. That starts at the open of this session right here at 1,700 last evening. So if you thought you were going to sneak an overnight trade in and you'd use your regular margin and you didn't have more than $5,000, you had a real unpleasant experience this morning when you got a margin call. It's just part of trading, part of real trading with a real account. And I don't mean that sarcastically. What I mean is a real funded account, not a prop thing or something else. Okay, let's look at what we think is going to happen. Well, we are likely to open gap low, so we will be in gap rules. Typically, I would be looking for some responsive buying to take profit, There's our open, and there's the close, and there's the open. And pretty much, I'd say 80 or 90%. Well, not really. Look at the volume up here. Pretty much balanced compared to down here after the report. Not a lot of volume. So if you want to look at it in terms of volume, we're probably a little long inventory. So we may just open auction. Remember, it's Friday. There's no holidays to Monday, I don't think. So there we go. So I guess I would always default to caution and an open auction on the open. Okay, looking at bookmap then. I guess this is bookmap. It's my execution platform. It's let's just go through it from right to left. This is the dome or the price ladder, the order book, pick whatever word you like to use. These are the prices. This is resting liquidity. Not trades, resting liquidity. These are resting sell offers. These are resting buy offers. This is where people talk about spoofing, which is just a complete joke, because think about it yourself. If you think for some reason that you want to sell one of your contracts at $6,900, and when we get to $6,900, and you put an order in, this will go to 118. Now, if in a little while you decide, I'm not so sure about that, you pull that off. It's now back to 117. Did you spoof? Were you trying to trick people, or were you actually thinking about it? You see what I mean? How can anybody prove that? So I think that whole spoofing thing was just a platitude for the retail world to make it seem like somebody was doing something. It's useless. I don't even, I paid no attention to it whatsoever. This is the micro composite chart where I manually enter these values. Here's the POC. Here's the gap low. This will be the gap high. I'm sorry. Man, I still haven't got that right. I can't seem to get this. There we go. God dang it. It's the gap high if we open down here. And the way I work a gap is very simple. The previous RTH low or high and the current or upcoming RTH open. That's my gap. If we open right here, right now, we're going to gap low 11 handles. There you go. These are the high and low volume nodes pushed here from the micro composite chart. This is the full session volume profile, which reset this last night at 1700, and these are all the volume that's transacted and through the night until this moment. There is the micro composite overnight volume point of control, supposedly, and it's at 44.23. The minute one of these other prices is 44.24, this line is going to move there, and this flag will move there. This is the RTH delta and volume profile, which is supposed to set at 8:30, and it doesn't ever seem to want to do that lately. This is my statistics column, which is real important to me. And these are the session prices from IRT, which are just as they, they're just abbreviations. There's a RTH close, okay? Notice that there's no indicator on my book map or my IRT. I only believe in trading price action or order flow, basically, with standard price levels and volume profile. No indicators or all that. There is a POC for both the full session and the RTH session. The full session is this kind of a muted yellow, and RTH is the brighter one. POC, nothing more complicated than the price at which the most contracts have traded so far in the session. Now, Bookmap is screwed up because this is, in fact, the overnight volume point of control. I always default to IRT. There is a volume weighted average price for the RTH and for the Globex, and there's a mid for the RTH. The rest of these levels are straightforward. Some levels that confuse frequently are the IB high and low, and IB is an acronym for market profile days called initial balance. What these levels really represent are the high, wherever it is above us, and the low of the first 1 hour of the RTH trading session. That's all there's to it. Now let's look at the statistics, which are pretty important to me here. The first thing I do is determine the statistical open for the day and set the title of the column to that. So there's only two criteria, and it's real simple. Like everything I do, KISS, baby. So here is, if we opened right here, right now, how would that compare to the previous RTH close? Well, there's a close, and here's the price. Lower, right? How would this open price compare to the previous RTH range? Well, here's the low, so it's lower out of range. I then change the title to lower out of range. And the reason I do that is purely selfish. When I take a look at a screen snap or the stream and I look at that title name, of that column, it gives me all the information I need to know about the open relationship. Next, we're going to clear the notes here because we're going to get rid of the statistics from yesterday, and we're going to figure the statistics for today. Now, I have to do something that I do every day at 8:20. And I need to do that first here, and this is why I don't multitask. So what I'm going to do is the TLab snap, and that is something here. There we go. That is okay, that's the way. Now, the TLab is a bookmap Discord chat room started and maintained by a guy named Tom B. And every day at 8:20, I put this snap in there. Every day at around 6, I put a snap of the reports. My way of tipping my hat to Tom and the folks in there. I used to be real active until I started this stream, which is actually a suggestion of Tom's, that a trader should focus on their trading and their market. Narrate continually the day as they're trading, not yucking it up in some Discord place or, whatever it is, in my opinion. And I can't do, I'm not a good multitasker, as I said. So for me to yuck it up and still trade right, I just had to make a focus of which I was going to do. And it was pretty obvious answer, right? So this is the report that I put in there every day. Now, let me make a couple of comments about the TLab. First of all, Tom, reportedly has traded about more than 46 years now and is very successful at it. But to be honest with you, I have no idea if that's true or not. I completely believe him, but, I'm being honest here. I've never seen his accounts. I've never known him past 2 or 3 years ago when I met him here in the TLab. So what the hell do I know, actually? And what do you know about me? What do I know about you? You know what I mean? It's we have to be real about it. I believe he's the truth. One of the things that I appreciated about the TLab when I was active in there, was I felt like the advice was good. And you are never solicited for anything. And there's a good crew of people in there that I've met and I still trade with, Static and Rod and Garrett and those guys, and Harry and whatnot, Jorgensen, those fellas. So there you go. That's the TLab. That's the staff. Now let's get back to business here. So back to the pre-market. We're going to open gap down. So we will be in gap rules. And let's do something that you'll probably agree is important, and that's to be able to trade with Bookmap. This is kind of important setup here. In order to trade in Bookmap, you must activate the trade control panel, which is right here. And then you need to select a method that you will use to trade with the application using your mouse. If you choose chart, the only place you can trade with your mouse is the chart column. If you choose DOM, it's the DOM columns, and both is, as you might suspect, both of them. Now, the next thing I do First of all, let me give you a real warning. This is a real danger area right here. You see how the mouse is a dollar sign and then it's an arrow? If you accidentally click in here at any point in the day when this is activated, you've got an order or a trade on, whether you meant to be or not. And I have done that. Obviously, you can imagine from my tone of voice here, the voice of experience, trying to like move my, reposition my price ladder or trying to move a stop and accidentally get on the other side of this line. Well, there you go. So I do think trading with your mouse in Bookmap is probably the fastest and the most accurate way to do it. You can trade with your keyboard, but you have to have, which I have activated, but you have to have the focus of the operating system on the application. That's typical for any. So let's get back to the setup here. The first thing that I do, in case you have this feature, this pushes your trades to a journal somewhere on the internet. I typically use Static, but anyway, there's that. Be sure this automatically, once you've selected it one time, it automatically defaults. I had it turned off. Minute I open it up, it's back on again, and I want it on the right account. Now, the next thing I do that's really important is select multi-brackets. This is where the risk neutral methodology is applied to my system. The smallest risk neutral account you can trade is a 2-lot. It must be an even number. 2-lot. Then you set a stop loss for the entire package, and now is not the time to be determining what this stop loss is. This should be well during your study period, away from the live market. My recommendation is the first criteria you better understand is your account risk parameter. What's the volatility of the instrument you're trading? What's the volatility of the market? Okay. Let's assume that you've selected these and that's what they are. The first risk neutral trade, or target, is automatic. It's for half of the package, and it's for the same number of ticks positively as the stop is negative. Then, the minute that's achieved, you're risk neutral. The worst you can do is scratch, unless you're a moron and you move your stop away from entry. But then you got more problems we can't deal with here. Then there's the runner, and you can have, whatever configuration of these you want to have. I'm going to use the basic here. And you can, another tool that's pretty handy to use, you might be interested in, is the Executive Pro. You can do, or Execution Pro. And I don't know that all this stuff does, to be honest with you. All I've ever used this for is if I want to have this set to 12 ticks, it'll automatically scroll or bring this, if I enable this, it will automatically trail it to break even once I achieve 12 ticks. I'm going to do that manually, so I'll turn that back off. Okay, so we're set up to go. Now, confirm 2-lot package. That means I don't need any of these other tools anymore. So I can, another thing. See the metrics here? I have those same metrics across the top. You can turn these off or on, no problem. I like them, and for this reason. Once that package in that method to trade has been selected, you can click that again and it stays green, stays active. You get cancel all, close all, and you get your real estate back. So now we're ready to trade in about a minute and a half. And we're open. Did we reset? No, we didn't. Son of a bitch. Sorry about that. Try to do that now. Let's see if we get it to work. 20 seconds. God, boy. That's really frustrating. So that's 27 seconds. I'll try to adjust that and see what happens. It's supposed to be automatic with the reset, thing. Anyway, so we are definitely gap open. Now, when we have the open flag here, I'll put that gap indicator over here. We are gap open, means we are in gap rules. And I'm going to be busy doing a couple other things here, so let's make sure we're unmuted and what. Okay, so the first thing I do now is change the IRT charting from full session to RTH only. So this is now yesterday's RTH session, and here's today's. And in case you had any questions about the gap, there you are. Savey. And jump over here, and in a second I'll explain to you why I'm doing that. As I said, I hope. Okay. I push all, there we go, there's our open. So our open right there for my RT is there. So that is, the way I do this is, start over here for you. There's the open. So I'm going to just flag this like this. And this is a gap low. Okay, there we go. Now we're in gap rules. What are the gap rules? Real simple, quick. If we open in a gap, and if we close the gap relatively early in the session, which is highly likely today, and if price is accepted within the previous RTH range and or value, there's a high probability we'll trade back across that range. If not, if price is rejected out of yesterday, what would you suppose would be the likely suspect? It would be to trade in the direction of the gap. That's the same story with trading upside down, backwards, and forwards. The market's going to, what do you think the market's going to do? Well, it's going to go up or it's going to go down. Yeah, no kidding. And that's one of the difficult parts about it. It's all the platitudes and involved with sayings, or the colloquialisms around saying is there. You can always interpret them whichever way you want, which is frustrating. But we're going to close that gap. It would appear, because there's the gap and there's the previous RTH low. Here's the IB high, and there's the IB low. Those look pretty good. I'm pretty happy about that at this point. What I was saying about the session prices that I'm sure I mentioned, if I start pushing these continuously from 1700 on Sunday night through 1600 today, Friday, if you would like these prices, I'm happy. I share them with a lot of people, and I'm happy to do that. Drop something in the chart. Hey, Popeye, morning. Or Poppy, sorry, I can't get your name right. Morning, Antonio. If they would be helpful to you, drop something, like, subscribe, throw something in the chat, and I'll hook you up with it. It's a link that comes from Google. It's a CSV, and you can slap it in Cloud Notes or on these indicators, or use it in whatever software you have, and you can have these levels, if they can help you. A lot of people in TLab and Static and every place still use them. There's that. What I was saying about changing the chart from full session to RTH. Those people who do use these levels and lean on them expect the value area low and the value area high to reflect yesterday's RTH session. They expect the developing value area high and low, which I can't see right now, but there is one, I promise. They expect those to be, there's a developing value area high. They expect those to be the current auction. Well, up until the split second where we opened today, that relationship was intact when I had full session on IRT. But the minute we opened this RTH session, in order to have the value area high and low reflect yesterday's RTH session, I need to change the IRT to RTH only. I hope that's not confusing, and it's probably just useless information, but I try to be as open and transparent about everything I do here as I can be. So there you go. Now, we got to do something top secret and real expensive here. So if you're not, behind the paywall, close your eyes. I'm going to put this real expensive indicator here called a vertical line on the chart. And what is this guy all about? Well, I do that for every session. And I'll show you that right there. Okay, thank you so much. There's ETH, and there's a previous RTH, and here's today. The reason for this is, in the days gone by, I used to use this column besides the statistics, which we need to get input in here. I used to put migrating volume points of control. Wherever this would migrate to, I'd put the flag. Well, I wasn't clever enough in the beginning, so I didn't put a number behind them, and I therefore didn't know the sequence of those flags. Clever. And then it occurred to me, well, if I just mark the opening print of the session and make sure that when I glance left over here that I can see Blue Boy, I will know that I have the entire session in view, and I will be firmly aware of the context, which is really important in my opinion. Hey buddy, what are you doing? You setting up some stuff in the computer or whatever? No wonder my computer doesn't work. Damn cat. Okay, he's doing some maintenance, I guess. Are you the IT guy? That's lucky not Panda there, Antonio. So, yeah. Now, it's a little bit late, but let's look at the statistics. Let's try to keep everything in order. The statistics, which we will, based on the open type, will be with their associated price levels over here. And where I do that is this stats tab, and boy here. Okay. This is it. It's a study in IRT. Now, conveniently, IRT highlights the correct open type, but only after 8:30, of course. I usually have this done well before the open, so shoot me. This is real simple, like everything else I do. There's only 4 types, as you can see: higher outer range, in range, lower in range, lower outer range, gap up, gap down. Okay, we got that figured out. Now, the way these statistics are, it's just probabilities. The system looks back at the last 1,686 trading days. Of those days, we opened lower out of range, 247 of them, 14%. Pretty scarce, chicken's teeth right there. Of the days we opened lower out of range, we revisited the overnight volume point of control 74.1% of the time. So we jump over here to the overnight volume point of control and we go 71.4. Bam. That's just as difficult as it gets. Now, I've missed the initial balance high and low because we've already opened, so shoot me. The next would be the overnight low at 70.9. And I'm just going to go down the list. And you ask yourself, well, moron, why are you doing this now? And that's because remember, this is a permanent record. And so when I look at a screen snap or the stream, I want to know what these levels are, which I apologize, should have been in there before the open, but the overnight low is not going to change, right? The overnight volume point of control is not going to change. So there you are. Yesterday's close isn't going to change. So here we go. And then we've got the IB high, which I can't do anything about. The overnight mid is 67.6. And be real sure you understand these are just probabilities. This is the probability of revisiting this price today based on a look back of 1,686 occurrences. Okay? It's not a line in the sand. It's not, there's previous low is 66.0. And that is right there. That's what it is. It's not a line in the sand. It's not something bet the college fund on. It's a probability. Get your head around that if you're going to do this. Previous close 40.9. I don't know how I got so off on my time this morning, but this should have been done long ago. I apologize. Value area low is 41.7. And I've already explained all that stuff. Value area high is nowhere yet. Overnight high is 31.6. Man, my eyes are bad. Is that enough to keep us out of trouble? I suppose. Well, we didn't close the gap. Notice that? We got pretty close to it, but we didn't close it. Right there. We didn't come up to the POC from the other day. And we're looking lower. We've got a naked volume point of control down here, which I think has been hammered from the 23rd. What else have we got that might mean something to me? So all I've done is gone down this list. Now, one thing that is important to notice, let's check and see if it's happened. By the way, if you have IRT, you can click this little guy right here, and it'll recalculate any indicator. I'm trying to keep these indicators from sucking up a lot of bandwidth. Notice how the overnight high or low is highlighted now blue instead of black, the overnight low. That's because it's been revisited. Whenever level's been revisited, this will change it to blue. So there you go. Okay. Oh, and out the bottom we go. Look at us. Aren't we fancy? There we go. Out the bottom. I don't think, I think the market has decided that, yeah, maybe we're not doing as good as some of the folks want us to believe. Okay, there we go. Oh, I think I'm caught up, aren't I? I'm not. Somebody shoot me. Well, go ahead anyway. That saved me a lot of time. Okay, gap rules, and so remember the gap rules. I went through them pretty quickly, but let's do them again. If we open in a gap, and if we close that gap and are accepted in the previous range, especially value, high probability that we trade across that previous range of value. If we are rejected back out of the range, high probability we will do what? We'll continue trading in the direction of the gap. I mean, it's like everything else, like I mentioned before. It's not rocket science. It's just like it is a statistical fact that the outcome of the next trade is 50-50. This is a binary market. This is a coin flip. What can price do? It can go up or down, period. You know, and it's a pretty random market. It's a random market because there are millions of participants, all expressing their opinion one way or the other. You know, it's not like the Aggie marching band where everybody's in step. Everybody's going a different, it's like herding cats. So, that's my opinion. Okay, so I think I've ranted and raved enough. We're open. I've got the stats up. Sorry, I missed the overnight highs and lows, or the IB highs and lows. They keep poking her lower, she said. Here was our volume micro composite for the longest time. I don't even know how many days. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 25 trading days. Okay. Notice in any of my IRT charting, if you see the little guy down here, the info box, wherever I highlight the mouse, you can see all the stats about that particular day. Remember that this is the micro composite chart, so each one of these is a daily candlestick. So this goes back to January 21st and ended on January 20th. February 24th, I'm sorry. So, and here is day before yesterday where, oh boy, we're going to go into the moon with the whatever that NVIDIA AI crap's about. Boy, talk about the Ponzi scheme of the century. That whole thing is really funny to me. Here's yesterday, and here's now. So, yeah. Market profile. Same. The Renko charts, ES and NQ. Also, if you trade minis, I track them here and push them, but I push those level prices and stuff for anybody that can need them. But since I'm trading the micros to do with, growing this account, or that's the point, or that's the idea, I'm trailing and tracking and focusing on the micros, as you see over here in Bookie Mappy, micro, regular. So what are we doing here, boys and girls? Well, we've traded all over hell and gone, haven't we? Up and down. We've got a bit of a short covering profile looking on there. They say that and this is market profilism, a P-shaped profile, P like Paul, which if you squint your eyes or use a mirror, you'll see that's a P, is typically indicative of short covering. And a B shape, the opposite side of that, would be long liquidation. Or, buying and selling, I guess. Okay. Oh, boy. Oh. So welcome to the stream. Papio. Need to figure out how to say your name, dude. And Antonio and whoever else, anybody else, all the other views I see up there. Remember, this is my virtual trading journal, completely transparent and accountable. When I take a trade in on the Bookmap, it is my live funded account, funded by me. I wish it was funded by somebody else, but I wish I was a lot younger and had a lot more money too. So there you go. What I need to do here, I had a well-vetted setup, which was the opening range. The initial balance, setups, and they were trading quite well. And then that edge evaporated to do with something. I'll talk about that later today, but I'm pretty disappointed about that. And I'm in the market for a good, viable, dependable strategy that I can vet. I don't take trades that I have not vetted, which means I'm pretty hung up at the moment. Now, let's see what happened here. Well, did I even send? Yeah, I did. Okay. What I've been doing, just out of curiosity, I've been going through various strategies, and the way I approach that is if I see some strategy and the person or whatever sounds like it might be viable, I do my best to code it up, and that's my real weak point, because I'm just an old cowboy from Montana here. I'm not a code monkey, and I really wish I was, because it would be much more efficient and expeditious, but it takes me a while to figure this out. And I use IRT for a backtesting engine and trade system. Now, let me point out a few things here. This trading system is being sent to this chart. Typically, this chart has nothing to do with anything other than it accurately reflects the rules and what's going on over here. So I can visually understand if what I expect is happening, when and where I expect it to. My primary use for this is to backtest, to find out if this particular opening range fade with the specific rules is valid or not. Because these people get on YouTube or wherever else, and nobody's going to say, well, this is a mediocre piece of crap strategy. This is the best strategy you'll ever have. You're going to retire. Your girlfriend's going to love you, whatever else it is, And my initial reaction to all of them, whoever it may be, however sincere and apparently interested in my success they are, I think, okay, thanks so much. And then I code that up exactly as they've talked about the rules or describe them, assuming that they have. And then I backtest it. And to be honest with you, one of the reasons I started with these opening range fade and the opening range trade was, if you look on YouTube or wherever else it is, wherever you're talking to somebody, these orb trades are all over the place. And I wondered, well, because what I need is I need a quick daily moneymaker, just a few ticks, a few points every day, maintenance, in other words. And that's what I'm looking for. So I have done that, and each and every one of them are as disappointing as I was afraid they would be. Typically what happens with YouTube, as I understand it, and in those places, you'll see a big flurry of these things. The orb trade is now the one, the flavor of the month. About every month or two, they come out with a flurry of those, all these various influencers. And the idea is to seem real sincere and all of that you're going to help these new traders make money. And that all this stuff that I'm not cherry picking. Look here, I went back and did this and that. It's just crap, so that they can get more subscribers and make more money from YouTube. Apparently, that's what somebody told me, and I haven't found any evidence to the contrary at this point. I've backtested several opening range and opening range fade trades setups from different people, 3 or 4 different people now. And they're crap. They don't work at all. Unless you go back, And the first thing I do is backtest them over 500 days, for example. That's a statistically significant data set. So that's where I'm at. That's what I'm doing here. The point of all that drama was that this was the opening range, the latest one that I was doing. Okay. And that's disappointing because I wish it weren't the case. So what this is looking at right now is an opening range trade in the first 90 minutes, a fade trade. The selling point of this is if you have a emotional or a directional move on the opening 15 minutes. This is a 15-minute one. 15 minutes. There's the opening range, 15 minutes. Typically, that is a engineered liquidity because a higher time frame wants to get a position on, and they can't do that without engineering some liquidity. And they get everybody going one direction, and then they come back on them, and they take advantage of all those stops to execute their position at a favorable price. That's the thinking. So that's what this does. You'll see how successful that one was. That was yesterday. Now, this is just how I watch it for today. And there's some basic rules that this manufactured or engineered liquidity candle, the first bar of the 15-minute opening range, needs to be at minimum 25% of the average true range for the instrument that you're talking about over the last 14 days or so, which I have done so. And then the concept is real simple. It breaks out. This is a short, right? So the price is going to come down here and then reverse. They want to get everybody thinking it's going to be a short. And they want to get a bunch of people in short, and they come down there and hit all the stops and go up. It's the idea. It doesn't seem to work right, but it's pretty simple. So very, very few rules. So we'll see what happens here. It's still, we're not even in the first 30 minutes. And I have no idea how this would apply in a gap situation and, any of that stuff. Oh, there we go. The vetted trade that I have done thoroughly and that I have been testing, which has become quite disappointing, is the opening range trade. Worked great for quite a while, and then last month or so, it's exceeded the back-tested data parameters for consecutive stops. So I need to evaluate it and try to figure out what's wrong with it, or not, or the edge is gone, or I broke something, or whatever else. So there you are. And they're not looking to close that gap. No more news out today unless we have this, Agent Orange opportunity here, the random risk band or whatever, as Richard calls them, Agent Orange. I think that's pretty funny. Yeah. And wouldn't it be a pleasure to just have a simple strategy that you can take a small trade every day, maintenance, I'm approaching this from a different point of view probably than a lot of people, because I approach this as I'm looking at trading as a statistical business, to support myself and my family. So that's where we are. It's a lot of fun when you don't have to think about it that way. And when, and I guess it's important also to point out that this is not a my way or the highway no part of this stream is my way or the highway, implied or intended. This is what I'm doing now. I'm open and transparent about it because I would hope anybody that's, participating in the stream would go, dude, you're out of your freaking mind. You need to try this. You know what I mean? Or that sounds like a good idea. Feedback, it's called. And until, otherwise I'll just keep plowing along here. Plowing ahead. Come what may. Is it hot in here? $18C right now. It says that doesn't even sound remotely correct. It feels hotter than that to me in general. So now I have to stop and think about what the hell to do here. There's no trade signaled or anything over here so far. What happened? What's all that about? I don't think I want to have both systems running on IRT at the same time. Oh, here we go. It looks like we're going to get a signal here at the, but it's the wrong way. So I am going to cut this opening range trade failure off. The idea would be when you have a big emotional gap down, the idea is to get a whole bunch of people FOMOing in on the gap, and then you take them, you take out their stops for the liquidity and run it up, reverse it, in other words. This would not be a viable trade in that setup, as I've understood it from this person, as it was explained, because it's already going in the reverse of that big emotional candle. So there you go. Now I can backtest this later, so that's not a question. Let's move on to something else here. What I'm going to do now is take this off the system so it's not sucking up resources that I don't think I need to be burning here. IRT just seems to be really struggling lately, and I'm trying to be nice to it as I can. So let's move on to the usual beauty here, which is the initial balance trade right here. Now this is my initial balance chart. I'm going to explain one more time that IRT trades live data, same data that I'm trading live on whatever that thing is over there, Bookmap. But, big but, she said. Come on. This is that system. This is the opening range system. Initial balance system. Now, I'm going to send this to this chart, and then it will be, if it detects a trade, it will take it, and it will plot over here. No trades will leave the simulated environment of IRT on this system. The way I've been doing this, and it's not very efficient, and I suspect that's part of my problem with the drawdown. Once I see a trade happen or, plotted, I, quick like a bunny, jump, try to replicate that trade with real money in real time on Bookmap. And I realize that's not efficient, but I think it's more prudent for me not to try and prematurely use IRT to trade algorithmically, because there's a lot of complicated stuff you need to get into. Backtesting is a no-brainer. But when you're sending trades live to a broker, okay, I've got to wait for broker response, for fills, and all that kind of stuff. And there's ways you can do that for sure, but I'm not up to speed with that enough to be confident with my own money. If it was a prop account, who the hell cares, what are going to cost you? $50 or $100 next month if you blow it up. It's not the case here. So that's where I'm at. Now, this chart has nothing to do with this system. These are only the, oh, wait a minute here. Let's get over here. This is only the, well, I type when I'm not looking, and that just gets everything all screwed up here. I'm trying to keep the session chapters in line because obviously the streams are 7 hours long. Well, I don't know about you, but I know I'm never going to stand here and listen to 7 hours of them. So I want to know where points are, chapters are that I want to, refer to. And that's why I try to keep a real accurate list going on there. And that's applied every evening after the stream stops. Anyway, so now we're testing the IB high again, but we're just increasing the IB high because it's not 930 yet, right? So back to this one. This chart has nothing to do with the system other than these lines and levels, which are custom indicators built by me, accurately reflect the places where the rules or levels would be applied in the system. So it's just a visual, just like with the opening range trade. This is just for me to know, is this crap happening when and where I think it ought to? That's what it boils down to. So nothing will be plotted over here in terms of these levels, these pullback or continuation zones or triggers until 9:30, because that's when the opening range trade happens. And down here is something I've been trying to keep an eye on, which is the average true range. And we'll talk about it later. But so what I'm going to do now is send this to the chart and sneeze. Hold on. Okay. And I'm going to turn these guys off because they just draw lines all over the place, and I don't want that to happen. So if and when we have a trade today, that'll plot over here, and they'll hopefully the signal markers will work correctly. And I'll quickly go through the system with you in a minute. Okay, yeah, so we're extending that IB higher because it's 910 almost. Remember, this just keeps going up, right? And this keeps going down for the first 1 hour. So there you go. We have closed the gap. So now let's see what happens with the world famous gap rules, huh? And one thing I can take advantage of showing you how I do this. What I do typically is when a value has been or a level has been revisited or is no longer active, I change the text to black. And that lets me know that it's not a piñata. Tudo fudido. Okay, now let's get back to the business at hand here, which is this explanation of all of these things. So the system has been pushed to the chart. If it takes a trade or signals a trade, it will hopefully trade it out, and I will be able to replicate that over here. I'm not sure what else I needed to yammer on about. We're set up there. Let's make sure we're set up here. Only one, yep. Okie dokie. Now you'll notice that when 9:30 happens, these lines and levels will start plotting and be pushed to bookmap for my viewing pleasure. Yeah. And again, let me point out that what I'm doing is just what I think is best at this moment, and I would really appreciate feedback or suggestions. Dude, you're out of your mind. This is what I do, and this is consistently profitable. I get one trade a day, whatever it is. You know what I mean? That's what I'm looking for. I'm not thinking I'm going to be Carmine Rosado or whatever his name is, or any of these multi-gazillion or Ferrari rep guys. I'm approaching it from a different, complete point of view, which is to I'm going to do something else I do every day. So I am going to restart IRT. Yeah, if these levels would be handy for you, let me know in the chat. It's happy to share them. No problem. I do with a lot of people. It's just a Google Drive link, and you drop it in your Cloud Notes column or your line indicator or whatever your particular software uses, or I guess you could use them as just a just as a sheet. I've never looked at that, to be honest with you. Maybe that would be a good idea. Just look at like a spreadsheet and say, okay, there's the levels. Or something like that. Okay, I've restarted IRT in case anybody has a hiccup in their levels now that I'm talking about them. I've noticed that if I do that every morning after the open, the laggy story kind of goes away. So I'm assuming it's got to do with a memory hole or leak somewhere. IRT is an old piece of software, very, very well built, but it doesn't multi-thread, And the lead developer who I knew, I guess he was the lead one, Chad Payne, has left. So a lot of the static guys are moving to Sierra Chart. I used to use Sierra Chart years ago and found IRT to be more comprehensive. What I don't want to do is end up going down some freaking rabbit hole to rebuild everything. You know what I mean? Like I'd have to completely rebuild the IRT session prices because there's all those people that depend on those every day. And I would have to do that seamlessly so they wouldn't even know the difference. In my mind. Micro composite, I saw some guys in Static talking about they couldn't figure out how to draw a micro composite volume profile. That's about as simple as falling off a freaking log, in IRT. I'll show you. So I don't know what to do, frankly. If I want to draw a volume profile around here, I just go to Profile, which I've created these buttons. You can also use the toolbar profile, and I just go drag it around there, and bam, there you are. Bob's your uncle. It's all done, Here's the Here's my micro composite total data volume profile. This is going back to May 29th of 2018. Right here, this profile. You know, there's a lot of professional quality features here, I think. That's the toolbar, and if you wanted to draw a profile, one of these guys does that. I don't know which one, to be honest with you. I don't ever use the damn thing. What's this say? Open ticker tape for quote page. Well, I don't want to do that. I typically do this. I don't like, like that toolbar. You can get access to any of that stuff by right-clicking and do show. There's all those things you can do. If you're using IRT and it's lagging on you, right-click on the chart, show, calc stats. This will tell you any indicator taking more than 2 milliseconds to recalculate. You see that it's session prices. It's taking 265 milliseconds. That's a lot. But I can't stop that because that's what's pushing through this data export. That's what's pushing the session price levels for all these folks in Bookmap. So, yeah, it's magic. There was a period of time when I traded with Tradeovate before they were purchased by NinjaTrader, which was really disappointing for me, but that was a great platform. It was browser-based, simple as hell, volume profile, same kind of, I'm not a candlestick, cloud, complicated lines everywhere guy, so it was pretty easy for me, and I traded that and just had a fine time. And then NinjaTrader bought them. Just to give you some idea what these companies make, and I'm not talking about prop firms, but NinjaTrader paid $200 million for Tradeovate, which is strictly a futures trading platform. Was developed by some ex-floor trader guys and run for about, I don't know, 3 or 4 years or something like that. Imagine getting some developers to put together a simple little platform in, I suppose, C# and $200 million bucks. Tom Sosnoff and what's his name? They sold Think or Swim for over $1 billion. So, all you coders out there, let's get together here. What I was going to do here was look at this. So there's the naked volume point of control at 69.1875. EOC 69.1875. Really? Way up here, huh? Let's see. Way up here. Holy smokes. Do I even have it in there? Probably not. There's the POC. 69.18. I'll bet it's right about there. About that high volume node. Well, looky there. Isn't that cute? This is, I should have done this early on in the day. I'm sorry I didn't do that. Naked volume point of control from whatever yesterday was, 260226. Boom. I try to keep these things accurate, POCs and VPOCs and all that stuff. It's the kind of thing about, maybe you can do all of this on Sierra chart, I don't know, but like the multi-profile, naked volume points of control, and fractals, and what the fractals off or on, or whatever else you want to do. Set the sensitivity for the high and low volume node. Anyway, what have we done? Well, we've closed the gap, and we don't look like we're really interested in taking it any higher, do we? Where'd Blue Boy go? Come on over here, you lazy devil. So, the musicking. Okay. Okay. Let's just fall back here and take a look at what happened. Now, we've got 10 more minutes before the initial balance trade happens. Let's see what was going on with this ridiculous thing over here. Okay, so you see what happened here now. If you were trading the IB or ORB breakout, which simply says, there's a couple ways to do that. Whichever side it breaks out, you go in that direction. That's the continuation. The other's the failure or the fade, which would mean when it broke out here, you'd fade it south. This particular setup, the guy specifically talks about the 15-minute candle, and you want to break out in the direction of the first 15-minute candle, which would be down here, so the trade's completely off the table. You know, I'm just struggling around to look for something that happens. The criteria that you need, in my opinion, well, it's not my opinion, it's true. The criteria you need is something. The first criteria for vetting a setup is it needs to happen fairly often, right? What the hell good is it to vet a trade that happens once a year? Probably not very good. Well, the opening range, and one of the reasons I'm told the YouTubers like the gurus like the opening range trade is there's one every day, right? So it's real simple to go back and cherry pick the hell out of it. I chose originally to vet the opening range or the initial balance because there's one of those every day too. So I thought that was a good idea. Also, with the initial balance trades, there are two. There's an initial balance failure and there's an initial balance continuation. So you essentially have a trade for a mean reversion situation and you have a trade for a trending situation. And that seemed like a good idea to me. That's why I chose it to start with. And now there's nothing to do yet because it's not 9:30. We've still got 7.5 minutes or whatever. Blue boy keeps hiding over here, that sneaky devil. Let's see what we've got. Well, this is pretty I typically, now watch this. This is 5 handles. Right? Each one of these is 5 handles. This looks like I have to be very careful with Bookmap. And one of the reasons I use Blue Boy now is to make sure I've got my context in view. And I always want to be sure I have a relative sense of scale to myself. Well, this is 5 handles. So look at this IB. We're talking 80. We're talking 40 handles in the IB. 40 handles, not ticks. Well, that's stupid. Typically, what I like to do, if I can do so, is be real careful I don't click over here because that's a trade. And I've done that before. Mr. Bad Eyes over here. What I'm trying to do here is get out to my usual. There you go. Usually I want to have 1 point here on the ladder. Now that is a consistent sense of scale for me. Big difference, huh? That's really important. This is a 40 handle opening range. And this is the ES. This is not the NQ. I don't know hell what that thing's doing. This is important for, I believe. Now we're up to value area low almost, right? You see where we took the initial balance high right up to the value area low? So let's look over here. Remember the opening range story? If we close relatively early in the session, well, it's not the first hour yet. And we have closed the gap and we have come right up to value, but been rejected back out of it so far. There are some people that just trade the gaps. The gap guy, remember him? Used to be a guy on YouTube or somewhere, internet. But how often are there gaps? You know, and one of the stories that a lot of these people and the guru guys do is they don't have bracket orders, and you always need to be sure you think about your risk management. You know? Yeah, we closed, here's our open, and yeah, we closed the gap. But what happened before that? Well, there's the open at 58, and this is 41. So there's 18 handles. Yeah, you got 18 handles worth of sand pounded in your backside before you came right with this gap close. Know what I mean? And I'm not say I have an answer to any of these questions. I'm saying I'm looking for one, trying to figure it out. Narrating. Okay. Now, there's all kinds of setups. VWAP to VPOC. Notice that the POC, the RTH VWAP, the mid, they're in a pile, baby. They're all right on top of each other within a point and a half. That's pretty heavy, traffic down there. This is the Globex VWAP, volume weighted average price. And we got about 2 minutes for that IB to have worked. This opening range thing is doing exactly nothing. Either one of them are working. Okay, that figures. And they sell them, so, look, and show them that. I had to scroll all the way back a month and a half to find a losing trade. All I had to do was scroll back to yesterday when I was vetting these things. And I'm pretty confident that I am correct about the methodology. I mean, English is my first language, so I can, and that's what they're talking, so I can, I'm pretty sure I understand that. And the code is not difficult. In that particular case, some of them are. I'd love to get a VPOC migration trade. Now, we did just get a VPOC migration on IRT. Over here, we got a VPOC migration right there. I keep the colors consistent, green for the IBs and VPOCs are yellow and that stuff. So we did get a VPOC migration up here. And now let's see how long it takes to materialize to the other side of the coin, you see right here. And there we have it over here. Not following suit yet with Bookmap, but there it is in IRT. Okay, there we go, 9:30. So the initial balance trade is hot. The high will no longer go up. The low will no longer go down. And we are in the initial balance range. Now it is a 40 handle initial balance. That is pretty dramatic. And here we are. You notice that the levels have become active. We don't have any rules yet. And I call them rules because that's what they call them in IRT, trading rules. You know. And you notice that the levels have come across the book map. So here we sit. Here we sit. Well, Harry is saying that 80 here is the previous IB low, which I didn't have. I didn't get it in there in time, so there you go. The 80's up here. Now, with the initial balance trade, like I said, there's two. There is an initial balance continuation and an initial balance failure. This would be a perfect, this is not one, but it's a perfect representation of one. This would be a perfect initial balance failure idea, right? It comes up to the IB, takes the stat, fails. I mean, as I look at these days, these mean reversion trades look awfully sweet. I just don't know how to, apart from gambling and guessing, I don't know how to set them up statistically. Identify them. It's never the signal or the initial strat level that's hard to see. How tough is it to see the initial balance high? How tough is it to see the high or low of the 15-minute opening range, for example? It's the qualifying parameters that validate the entry. That's the part that's tough. We've been talking here about the VPOC migrations for a long time, jokingly, in that, oh boy, it's my favorite trade. Absolutely not, because it's the least successful. Okay. Now, what's happened in the snooze as so here we go. Here's the second one that's come on now. These Trump Agent Orange risk deals, 12 o'clock and then 15:35. That one isn't going to be of any interest for me, but any potential impact. But there you go. So 12 o'clock's the first one, which is fine. And I'm so glad that I know that. I'll just keep away from the market because I manage my risk. This thing keeps twirling around. It looks to me like it's thinking all the time, and they've got so many ads. I'm going to do that right there. I started using Edge, which I never had any use for, because I saw somewhere somebody told me that Chrome is a real memory hog. So I'm trying Edge out to see what I think. Who the hell knows? To do with, back to the initial balance trades, if you looked over here, so the way this would work is, assuming this price trades up through the initial balance, that would be the A signal. There's only 3 signals, by the way, and I'm not very imaginative. They're named A, B, and trigger. It takes out the A, then it can go up to the continuation zone and back to the trigger, or could fall back to the pullback zone and up to the trigger and then in revert, or, you know, boop, boop, boop. That's how we cook this up. I think Rod suggested that originally. Try these levels out. So I did. I've added them out and it worked quite well for a while. Then it quit, and that's puzzles me. I don't think I did anything, right? I mean, I did add a context filter of a moving average of volume and an ATR filter, trying to get away from huge volatility. You know, keep out of it. So, I don't know. We'll see what happens. What I was going to say was that if you're in an environment like this with those 2 different kinds of trades, the pullback, the pullback, which is essentially just mean reversion, or the continuation, which is basically directional or trend day, those 2 different trade types would lend themselves to a mean reversion day, balanced day. And here we go. Look at us go up here if we're going to take this IB high. Maybe. Every day I feel the need to say, don't trade in anticipation of the statistic. And that's, look at there again, you know. So if you traded, we're going to take the IB high, you got long right there. You didn't get the IB high and you're stopped out. If you have a 3-lot, you know, a 3-point or a, depending on how your bracket configuration set up, but you see what I mean? And that's not unusual. I think that has to do with manufactured liquidity, but who knows? I don't know. But there you go. Now, will we take the initial balance? Yeah, I would suppose so. It's the highest probable. It has the highest probability of every trading day that the IB statistic will be achieved. The IB statistic is, I'm going to stand by here until we take it or not, but just quickly, the IB statistic is the most probable of each day. Today, it is 97.6%. So 2.4% of the time of the days where we open lower out of range, we don't take the initial balance high or low. Yesterday was 1.4%. And all this statistic says is that at some point between 9:30 in the morning Central Standard Time and 1600 in the afternoon, the RTH session, in other words, the price will revisit the IB high or low at some point in that period of time. That's all it says. But that's the statistic. Okay, it's not 100%, and a couple of times in recent memory, we have not taken either one. So, there you go. But that's the statistic, which constitutes the first rule in my playbook, and then takes us back over here to my don't trade in anticipation of the statistic. Oh, there you go. And it's interesting that 80 is a level that Harry was talking about. It's also the previous MCVPOC, and it's as you see right over here, which has been revisited now, but I'm going to gray that out like I'm supposed to. But you know, what would you imagine has more horsepower? An a POC for 28 or however many days we decided it was over here, or yesterday. You see where we traded right up to it there and didn't get anywhere. I have no clue. I'm not saying I know the answer. I'm saying I wonder. This'll. So how many times did we tease that? Well, once for sure. Pretty close to twice. No stat, no signal, nobody left on third. The signal markers A, B, and trigger will appear over here, assuming that this all works as I anticipate. I have trouble with those markers. I don't know why. I think a lot of it has to do with the lag, I believe. But what those markers are is they're just a graphic representation on the chart for flags that will occur up here. So there you go. And again, I want to say, I'm not saying that we're not going to take the initial balance high. What I'm saying is, look at how many times you got spanked trying to trade to the stat in anticipation of it. Now we're going to probably take it right there. Okay, there you go. Yes, we did. Now it should plot an A over here because I have there you go. I have a little bit more of a granular requirement in that besides the signal bar, the previous bar needs to open lower than the close when we're trading up towards the initial balance high. So that's an A. You see there's an A and there's an A. Isn't that cute? And then we'll see if we get a B, and then we'll see if we get a trigger, and then we'll see if we make money. Or if I, start scrounging around the office here for that bottle of wine. Let's see. Well, people are... Now we don't have either one. Let me just, okay. A, let's try to make this a little easier to see. A is the market trades up to and takes out the IB. The B signal can be a B continuation or a B failure, and that is that we trade up to within this range, this zone, and that would mean if we pop up here, we we could get a B. And then a trigger would be after the B, we come back to the trigger zone. Real simple, like I said. Okay? There's a B so far, assuming this bar closes there. One of the things that I have to be real careful about that I'm not, that I think has been a problem, is jumping the gun, you know, like just kind of like trading to the statistic. And I know I need to take my own dog food here. So that B is gone, you see that? And that's because the high, the rule for B says the high is within the zone. Now, let me come back to how in the hell do you update and maintain the system, or a trading system like this, with some sort of systematic methodology? Well, if I don't think that that's a valid signal, that it has to stay within the zone, I can't just trade that or arbitrarily take that trade. That's discretion. That ruins all the work. If I think that that's not valid, then I need to backtest the system as it is, and then I need to make that change, and then I need to run another backtest, and I need to do all of that away from the live market. All the work that I put in and that I believe most successful traders do is away from the market. Now that would be a trigger, and that's not correct. Oh, look at here. No, there's the B, and there's a trigger. So that should be a signaled trade, long. Now, do I come over here and take long? This is the part where I'm falling down, because I'm using discretion absolutely right now, and that's not the thing to do. But I also am sick and tired of standing here and dying by 1,000 cuts, you know? So had I taken that trade, I would be a tick away from stopping out. Boom, stopped out. So I'm happy I didn't do it. The system didn't put the trade in yet, and there's a B now signaled. And the reason the system didn't do this, I think, yes, is the moving average, the volume average. Let's look. Yeah. There needs to be 2 negative, boom, bitty boom, and that's why this didn't enter a trade. This is a volume, basically volume moving average, and if anybody's got a better way of figuring this out, let me know. Now, if we get up here for a signal, this would be a short, and the system has taken the short, I think. Or has it taken? It's taken the long. So that is maybe one of the problems I have with the system, because this moving average kept it off until it was, you know, right, and then it went ahead and entered. So it's entering, and it's sitting on a short right now, long right now. What do I do here? Shorts, sellers are not getting anywhere. We need to get into this low volume node. We've closed the gap. I suppose if I was quick, I'd have taken that signal right there. The trigger, I guess. I don't know. But this all kind of worries me. Let's see something else. 55s, okay. We don't have far to go up here for a VPOC migration north. yeah, I'm now if my narration here, and oh, look at there. Aren't I disappointed I didn't take that short? If my narration here sounds like I'm just kind of floundering, you're exactly right. It's exactly right. And there's that VPOC migration I was worried about. This is where I want to be more of a systematic trader, right? Because winging this and oh boy that and the low volume here and this, you know, guy losing out over here and all that stuff is way down that discretionary rabbit hole. I'm not saying there's anything wrong with that, but yeah. And I think, like most traders, my tendency is to think I'm a clever enough boy to trade this like a gunslinger with discretion, you know? I have the hard proof that that's not the case, but some people can look in the mirror and they look like 10 miles of muddy road and they think they look like a movie star, so what do you want? We have the famous VPOC migration. Yeah. So we got shaken out of value. Yeah, value area low. We were rejected back out of value. Right here. This is disconcerting here. Concerning me. Oh, man. And I don't know how to get on that. I would say we're right back at the gap high. You know. And here's a trade that I would like to figure out, which you see all the freaking time, and that's a 3-bar reversal right there. And the entry would have been right there, short. And that fits in with my keep it simple. Oh yeah, keep it simple, stupid idea. But I have to figure out how to code that. I'm trying everything. You know, I figure I'm trying everything that I can that's suggested, but I'm trying it with methodology. I code it, I backtest it. If it makes sense, then I'll look at it. If not, I won't. My problem is I don't have, you know, I'm not probably going to live as long as Methuselah here, so I've got to get this show on the road. Myself. And once again, VPOC migration, what are they going to do, you know? You know how many times I've gone down that road. Now, if you want to look at the system trading, it is scratched. Right now, it's flat. I'm not sure that even makes sense. So I need to really look at, that's why I keep these things open. Look at the rules to make sure it's doing, like I said early on, this chart is for me to see if this system is doing what I think it should be doing where. And as I'm busy babbling, gee whiz, what happened over here? I don't know what to say. What's going on with this silly thing over here? Well, you see, now had you taken the continuation, you know, it's like all of these things. Yeah, maybe that would work. This is the range. The range is 26 points right here. So, you know, if you took 13 points, depending on how you trade it. The way some people trade it, the old school story, but not with a 15-minute chart, not with a 15-minute OB. Whichever side it pops out, they put a trade on in that direction and put the stop just below the other side. Now, if you're trading somebody else's money and you can, you know, risk 26 points, not ticks, points, okay. What's your risk to reward? In order to be even 1-to-1, you got to get up here. You know? So, yeah. I don't think that's got any legs as far as I'm concerned. What's happening over in... Well, our volume has come back from outer space here, but it's still $1.16 for this time of day, and we're at 4 points ATR in a 1-minute bar. So, if you're trading my risk neutral 2-lot package, you better be real good at it, or you're going to get El Stopamundo, because the average 1-minute swing, true range, is wider than the stop. So, so there we go. Now I see Harry doing this and Rod doing that, and everybody's making money, I guess. Yeah, Rod is making money as usual. He makes a lot of money. He's posted his monthly, you know, static journal a couple of times. He's in the 40 grand a month somewhere. Seems like a real nice guy, and I'm real happy for him. And Harry, all of the guys in Static, Harry and Rod Jorgensen, Garrett. Peter's in there, but he doesn't come in very often, especially now that he's moved back to Bangkok. I don't know, what to say or do other than just keep narrating this and looking for something. Like I said, if I can figure out how to code up a 3-bar reversal, maybe that's the thing to look for. I don't know. I know people that do trade that kind of thing, or at least claim they do, and make money. And I'm not looking to make a lot. I'm not looking to get, filthy rich. I'm not going to turn that down, of course, but first things first, consistent profitability with a risk reward, a good risk reward or R value, and that's the way to do it. What Rod is actually saying, I could open static up here and include it into the stream, but it's a private, he's not made it open to the public, and I don't guess it's my business to do that, so I hate to be that way. I don't know. I don't see whether he stopped out or what he did, to be honest, brother. Looks to me like yeah, guess he did. Can't keep up. It's so easy to go, well, when I did this and that and back and forth, and maybe I'm just too old to and want to have some sort of a systematic approach that's consistent, but it could be my downfall. You never know. I guess that VPOC migration being a little leery of that paid off okay. Here we go with that trade again. Now, however, if you took it flat, stopped out, then it goes. How do you know that this wasn't the break, this wasn't the break? So you came down, you tested back up, you got short there, or long there, you got stopped out here. That trade just doesn't, I have not figured it out with any kind of a reasonable risk reward. Here we go, out the top some more. I don't know what to say. Or think here, actually. Let's see what the system's up to. Well, we got an A and we got a B. Let's see if we get a trigger and go out the top side now. So there was the A. There's the B, and the trigger will be down here. Right back up to a previous high. That's a pretty scary story, isn't it? Except our overnight volume point of control is a pretty high stat, and that's up there at the top. I'm conflicted because first I don't have a signal. Well, now I do. we're basically in a balanced environment. So typically that would mean I'd be looking for a short. Been down this road before, huh? And the no trigger on the system. It's got to be because of that. It has to be because of that volume average. Am I showing? No. There we go. There's the trigger. Now, do I take that trigger discretionarily, non-discretionarily, and just hope for the best? That's the way you're supposed to do it. But it's kind of nerve-wracking. And we keep flushing right around that POC again. And that would be pretty close to a stop right there. It's, it's definitely rotational, I think, and I'm staying away from it. I don't know about the long. That would be the signal trade. The system's actually in it. But I just don't feel like, oh, and here we go. Here comes a whole bunch of let's sell it guys. Are they getting any love over here? I don't know how to judge that. When I see a big sell, and remember that this is delta. So twice I've elected not to take the signal and saved me 2 stops. Now what Harry's doing is he is shorting the tops. He's shorting his value areas. These guys are strictly discretionary. They don't use a system at all. And what's happening over here, you see this volume average is really screwing this thing up. Because there wasn't that value area at the signal to here, it's long down here. Well, that's maybe a better position to be long in, but at the moment, it looks to me like shorts are the way to go. And what Harriet was just calling was a short on the value area. And of course, when you look back in the rearview mirror, I knew very definitely that this was the, come on, blue boy, coward. Hey, what's going on here? I knew very definitely this was the low. And then I shorted the top, and, this test up here was obviously failure, so I shorted again. Of course I didn't do that stuff, and I didn't see it, at the moment. And here's what I mean by that. What's the price going to do right there? Do you know? How would you know? How should I know to short this? Because we're right up here at this low volume area at these highs. We've got the VP overnight volume point of control, which is like the second highest, well, the third highest statistic above us. Few handles. Even more scary. Now what's going to happen? The hard right edge is a different world. And I really wish I had a interesting trade-filled narration here that was just banging them off. But I don't. Well, I'll tell you one thing. I may not be much of an exciting streamer or at this point consistently successful, consistently profitable, but I am not an overtrader. I guess, and I suppose that it probably adds to both of those things. What I'm talking about with that moving average thing is here. This is a moving average of volume. And I have it set so that in order for this signal, the number of that line is lower than the number of the line one back. Okay, so that cannot be the case anywhere here. So the first bar, that value, whatever that is, number-wise, is lower than this one. Boom. The signal, the system was sitting waiting. There's an A, there's a B, and there's the trigger. Now the system is waiting for that third or that fourth, for this filter to go to test positive, because everything in these systems is just Boolean, right? All right. And the minute it does, there you go. It fires the entry. I've looked at attaching this A, moving the volume average on the trigger so that the trigger wouldn't fire until it was correct. Maybe I need to rethink the whole average thing. I mean, that's the problem. This is what I have to do in my study hours or my homework hours, not here. And it was working great, and then all of a sudden the whole thing fell on its ass. And I assume it's got to do with market volatility in the market, but maybe I'm wrong. So now what are we going to do? We're going to trade up here and get lucky for a mean reversion the third time, fourth time, whatever it is. Yeah, third time. 1, 2, 3. We're going to go short. Is that the idea? The minute I look at that, I think, no way am I going there, because I've got a low volume node here, a big low volume node in the full session, and I've got the overnight volume point of control up here at the third or the second highest statistic for the session. Seems like a real bad idea to me. Wrong window, sorry. I don't know. It's real easy to hindsight, of course, the rearview mirror is so clear. And yeah, if you were just a gambler or a whipper and a spurrer and you just threw on a short up here, another test, is that a bad idea? Well, it would be an asymmetrical trade location, and maybe that's good enough. If you did it here, if you did it here, and if you did it here, what does that mean, asymmetrical trade location? Well, I'm sorry, here, and here. Throw a short on. Put your stop right there. You're wrong right there. You're wrong a tick away. And now you're coming up to 10 points here. You're looking at 8, 6, 7 points anyway. I'm kind of getting to the point where I'm thinking that I don't know how I would code that and backtest it. That's one of my biggest problems, I guess, is that I believe in the theory of vetting the trade and leaning on the law of large numbers and the statistics, the probability or the edge. Obviously, it's like garbage in, garbage out. The key is, how did you code it? and you know, short, what is that? 2 targets. Short. 2 targets. Short. So far on 1 target, pushing on 2. Every one of those double target shorts with no heat are 60 ticks. So that's 180 ticks in 30 minutes. Well, another one of those mean reversions at the top, huh? How many times is that going to go up and happen? I'll show you how to change that so it never happens again. I'll just go short up here. That seems to be the big hit. All large, small, V large. What does that mean? Oh. Oh, what is this? So we've got the full session VPOC migration. We'll have the RTH here in about another handful, 1,000 or so contracts. Remember that this is just real easy. There's about 7,500 contracts right there at that one. We're up here in the 6s now. The minute this volume trades one contract more than this one, this is up she goes. My initial, my unofficial prediction is we'll achieve the overnight volume point of control statistic before the day is over here. So keep your eyeballs on 91 quarter-ish, 91 quarter, 91 half, 91 half. And so what with that prediction and $5, you can get yourself a Starbucks, Getting a lot of buyers up here in this low volume node. I'm assuming we're going to make the pop for too long. Oh, and there we go, Dumperoonie. What they're going to do now, in my opinion, is they're going to pull it down here and bring the volume up for a VPOC migration. That's my guess. So watch for VPOC migration up here into this 80s area from here to here, and you can tell when that's going to happen immediately by just watching the numbers go, right? They got to get there. This is six, there's the 7s, this is 74. They got to get 300 more contracts, and bingo, bango, bongo, there you go. Look at him sell it. So what are they accomplishing? Who is accomplishing this? What are they trying to do? I always try to understand that. Are they trying to... Was this just profit taking? There was no more buying, so the sellers have to come across? In order for this to happen, right? Aggressive sellers have got to cross the inside bid and the inside market and hit the bid. That's how the market, the futures market, goes up and down. It's important to recognize futures is a zero-sum game. There are never more sellers than buyers. Oh, look here, they brought it up here. Now they're going to take it up one more lift, I guess. There's never more sellers than buyers. It's impossible. We trade contracts. It requires one of each. So every time you buy, somebody's on the other side, the counterparty's on the other side selling. You think it's going up, they think it's going to go down. Simple. And a fact. Now, how does the market actually go up and down? To go down, aggressive sellers cross the inside market and hit the bid. Boom, bitty, boom, bitty, boom. If there, let's say there's 300 contracts right here. A guy puts comes across and hits a bid for 400 contracts. This is going to go down 3 price levels. Simple. It goes up the opposite way. Aggressive buyers come across the inside market and lift the ask. Same story. It's not rocket science, and one of the beautiful parts about the futures market, in my opinion, is that fact. That and the fact that it's pretty transparent, probably more so than any of the others. It's regulated heavily, and that's great as far as I'm concerned. And super tax advantage. So there's a lot of reasons we're here. I'm sure you all know that. Also great software for trading this particularly. Going on over here in Wally World? Well, there's a scratch and an 8-tick stop, and nobody left on third right over here. All the zones are flat. That's correct. No signal here, or here, or here. As far as an A would be concerned, which would put us a flag in here, or here, or here, or here. I mean, here or here. So all of this is meaningless as far as this trading system is concerned. Meaningless as far as the market's concerned, but you get the point. I hope I was on the right window there. I was talking about just to recap. 8 tick stop, 8 tick loss, scratch, no signal here. And this is within the simulated environment in IRT, once again, not being pushed to my live account for obvious reasons. I'm not confident enough with my ability to take this code to the next step for live trading through a brokerage because there's a whole bunch of two-way communication that has to be done. You know, IRT sends an order to the broker, then the broker records when they got that order, then the broker responds with what the status of that order and what the fills were, and then IRT updates what you did with the fills. You know what I mean? And it's not like here, which is at back tests within the system. So that's why this is here, and I do it for learning purposes, and or I haven't done it today, and I've talked about it plenty, that I'm not taking these trades because I'm not going to die by 1,000 cuts over here until I figure out what's wrong with this system that was working well. So the way I would do it normally, when there was a trade signaled here, I would manually replicate it over here on Bookmap in the live account. Likely a dumb thing to do, but hey. Oh, look at us now. Well, I had this thing way off. Okay, this thing was way off. My water bottle was in the way. If you notice down here at the bottom, you see this progress bar? Watch this. You see how it immediately turns gray? It stopped. The chart will not update. It will sit like that till the cows come home. I was clear over here. And I thought, wait a minute, what's going on? Well, that was what was going on. So, there we go. Ooh, good looking gal just came over here and gave me the high sign to follow her. So I'm going to have to go see which way she went, the kitchen or, you know, somewhere. And good morning. Thanks for stopping by. Like, thumbs up, subscribe. That's a big one. That'd be a huge help. Need about 1 million subscribers, and then I can be a internet or YouTube guru trader and just, you know, wax eloquent with all my rules and stuff. Maybe not. Antonio probably fell off his chair laughing over there. Oh, no, he's probably already listening to Tom. Well, gee whiz, look at there. VPOC migration. Who'd have thought, huh? Well, what's going on over here? So there's the A, there's the B, there's the trigger, again with the volume average, and then up we go. There's T1, and we're still hanging on T2, I guess, up here. I think this average is what's tripping me up, maybe. I thought I had a way figured to neutralize that so that I could see how it reacted without it, but I'm not sure I'm right. And the way I do these kind of things, in case you're curious, is I use the main for a lot of stuff. It's where I put in all of the, position start, position trade start, timing, all that kind of stuff. This is that particular volume average right here. And then, how we're going to do this, how we're going to set the, for short and long based on highs, lows, close. Position state, this is the basic T1 or risk neutral package, essentially. Trail or not. ATRs. And this TR stop, TR1, TR2, these are where I started putting in values for actually trading. I'm sorry. This is trading range, which is the token for true range. So if I were to, I do it this way so that, in other words, if I want to change that volume average here from a 9-period look back, 9-period moved average or more than a 1-bar look back, I can do that right here, change those two numbers and save it, and then all the places for the entries and the stops and all that are updated because they are just looking at the VPound number. So that's how you do that. And this is going to be a scratcher pretty quick. Okay, let's get onward and upward here. They migrated the VPOC up just as I expected that to do and talked about it earlier. And now what are you going to do? They're going to abuse all the boys and girls that thought that this was a VPOC migration and got all excited about going higher. And there's that scratch because it didn't make T2. We're fast approaching a P-shaped profile, which is short covering. Typically considered to be short coupling, short covering, short coupling. I think I was on the right page. I hope so. Yeah, I am. Okay, I have some asset. This is frustrating. Look at them go. Oh, baby, they're hammering them now. Oh, and we've got the great and powerful. Oh, okay. Okie dokie. Extreme fear is 11. This says 13. Oh, Bitcoin, never mind. Never mind. Look at them sell that baby down. They got everybody up there going, yay, we're going for the moon, Alice. And once again, if you just blindly threw a mean reversion on there, I think that's going to be my next plan. The problem I have with this is, and frankly speaking, I can't, there's no sim here. If I trade this mean reversion to see what the hell happens, that's a live trade with my money. You know? And that doesn't fall in the risk management category in my world. Now, I'll try to figure out a way to code this up so that I can do it and backtest it. In order for me to have a sim account, or at least as far as I know, with AMP anyway, I've got to have a whole nother, open up a whole new deal. Call the trading desk and tell them to switch it to a, SAM and a bunch of crap, rather than just flip-flop from live to sim, which would be really handy. Now, if I could figure out a way in IRT, and there is, I'm sure, well, that's what this cancel and flatten all and all this crap's about, buy limit and all that. You can trade essentially in a playback mode, replay they call it, playback, replay, I forget what. And within the sim environment, but it's not as smooth, and it's obviously not using bookmap where I normally execute. So I don't know what to do. Who to screw, what to do, all those pertinent questions. I do know that the random risk band is taking the stage at the top of the hour, so this cowboy is going to go take advantage of that to, get some fresh air, rest my eyes, and probably jump through the shower, please my cat. Old Panda's sleeping here with her nose plugged. Make sure we got the music blaring for the disco here. Risk neutral trading disco. And we got a few more in line there on that one. I don't hear this music, so terrible or something, or you want to hear something different, throw it in the chat. I have to put my headset on to hear it because it goes out on the stream, and there's no speakers in this office anyways. Okay. And I've got to clean my keyboards. It looks like that old Microsoft one looks like it's got alien life forms developing over there. Now we are at a point that is a pretty classic or well understood, I don't know about understood, but well discussed setup, which is VWAP or mid to VPOC. I'm not Again, I'm not confident enough to do that in this environment with my own money. Nor do I think that would be a prudent use or prudent risk management. But it is a known thing, and we've the POC has migrated outside the IB. That's another. I think that's one of Rod's, but it has to migrate, I think, minimum 3 or 5 points before it's considered a juicy target. Well, and they're you know why? Guess who's coming at guess who's coming at the top of the hour? Okay, well, in that case, I'm going to take advantage of my advice is shut off your trading. I'm going to do that right now. Hold on. I'm going to disable the trade control panel. I'm going to first cancel and flatten and disable, so I don't have any nasty surprises. You know, Lucky's thinks it's really funny to get up here and mosey around on my keyboard. By the way, if you're interested in executing with a keyboard, you set that up right here, and instrument trading right there. These are the hot keys that I've initiated to trade. If you want to take a screen grab of that or whatever else, if you're interested, it's real simple to do. The only thing that you need to do is, and I executed with just a keyboard for the longest time. I mean, a long time. But I got to thinking, well, you know, if I can just put my mouse right there and click, that's got to be a lot more precise and fast than this thing. You know, this is really only good for bids, you know, for limits or markets at the price. You can hit the bid, you can lift the, offer, but at wherever this thing is trading. So you can't go up here, or at least I don't know how to do with a keyboard. Go up here someplace, like up here, and put in a limit order, for example. Another thing that's important that you must know if you're going to use the keyboard to execute on Bookmap is that your computer needs to have focus on the application. If you're looking at Bookmap or your, Discord or who knows what, and then you look over at Bookmap and go, oh, I want to trade there, and you click hell out of stuff on your keyboard, nothing going to happen. You have to click the application. It has to have the focus of the operating system, and that is an absolute normal behavior in OS, iOS, and I think even Linux. I mean, stop and think about it. If the computer doesn't know what you're looking at, how is it going to know what to do, no matter what you click? So that's important to know. Now, was this the spot that you got long? You did a mean reversion down here? Or was that the third mean reversion up here that worked out like a beauty in the face of a VPOC migration? There you are. I'm going to step away. Have a great one. It's on mute. I'll be back pretty quick. All right, Power Hour on Friday. Boo hiss boo. Well, it's been an interesting week, but until I get this, until I get these issues sorted out with my vetted trade, or vet more setups, this is what I'm going to do. I'm not going to throw money and effort and trade at like a gambler or a video gamer. So I'm going to follow the process. I just need to get more of the process in place. So typically at about 1400 here, I go through the back testing. And so here we go. Now, first, it's important to know that I approach trading as a statistical business of probability, based on probability, rather than discretion or gambling or just random entry points. And I do that because that's what I've worked out the most successful traders in the world do. My phone down there. It's real simple. I mean, it's a real simple for me to say and to describe, and it's really valuable to implement. You identify a signal or some recurring signal that happens, frequently. Obviously, you don't want a signal that happened once a year, So in my case, I'll use my case here now, the vetted trade I have, which is the initial balance high and low, the initial balance trades. There's two of them. There's an IB, for example, we come up here, continuation trade, and there's an IB failure trade. So, and there is one each of those for the IB high and one each for the IB low. So, and because it's the initial balance, and by the nature of the definition of that level or that statistic, it happens every day, every RTH trading session. So that's, I think, a good requirement or a good qualification to choose that as something to vet. And by vet, I'm not even sure where that word. Anyway, means simply that I identify that level and the criteria that is required to enter a trade for there, and then capture a statistically significant data set of that level and those criteria, and determine statistically whether that has a positive edge or not. That's vetting, the vetting service. And when you vet employees, or vet a congressman, or vet a cabinet member, you go through their background and then question them, and you determine if they qualify for whatever the job, or in our case, to be part of our trading environment, our trading plan. Again, I did this with the initial balance trades, and I want to stress that this is not something I just, it's no epiphany I had in my sleep that this is the best way to approach this. This is from gaining information from the most successful traders and hedge funds in the world. So I think it's a good idea. Not my original idea. I'm following what I think is a good idea by the people that are the best at what we do. Tom Sosniff, Jim Simmons, Tom the Trader, Paul Tudor Jones, Druckenmiller, guys like that. I don't know if Soros traded that way. I'm not sure. But anyway, Mark Douglas, Tom the Trader, the best loser wins guy, who's quite popular now. They all say the same thing, you know. Find a probability or an edge, and let the law of large numbers or the number of occurrences manifest the edge to your account. It's also the exact business model of the gaming industry from the point of view of a casino. They play no game on the casino floor which they have not pre-identified as a positive edge when observing specific rules. Then they put that game on the floor, and their only mission in life on the casino floor is to play that game as many times as they can in 24 hours, relying on the law of large numbers, which, you know, is a scientific thing. Go look it up, Google it. The law of large numbers to manifest that expectancy or that percentage of edge probability to the bank account. That's why nobody on the casino floor is ever emotional. They don't care if you win or lose. They're there to put in their time, their hours, and play that game as many times as they can. They don't care. It means nothing, because the casino's making the money on the probability, not on each individual hand. Real simple. Obviously, rules they pay attention to because those are important. So should we. If you vet a trade that says, I'm going to take, I'll talk about it maybe a little in more detail on rules on my actual system. If your plan says one rule is to take the statistic, the second rule is to enter the pullback or the continuation zone, and the third rule is to come back to the trigger zone, and that's your trade in whichever direction one of those two B signals happen. That's your trade. You do that every time. You don't do it if the price got close to the continuation zone, or maybe it didn't quite reach the trigger zone. You don't, none of those things. Precisely the rules. So here we are. This is the initial balance trade system that I have come up with so far. Here's the results of that system today here on the NIRT. Now, real important for me to point out every time I do this, because I don't want to, hear anybody screaming. This is simulated within IRT, because I'm not confident enough in my coding or rules development to take the next step from this, which is backtesting, to actually having IRT send trades to my broker on my live account, which is AMP, through Rhythmic. And that's how I trade over here in Bookmap, but I could also do it directly from here. The difference is there's quite a few more steps that are real important, as you might imagine, that need to be done. For example, when you send an order, it goes through the system to the broker, to the data provider. Then there is a backflow conversation. When was that trade executed? At what price was that trade executed? And that comes back through the data provider and the broker and back to IRT, and then updates the entry position, for example. Now, none of that needs to happen over here, and those are all extra steps, which they've actually included. I don't know whether I have it here or not. They've actually included tokens for. Tokens are what, let me show you a token here. Let's just look at along. This is an IB continuation along entry system. Now, these are all tokens. Lots of different things. RTH token. And all of these TR things right here, these are all what you use. These are what is used to send and receive data and update per live trading. So it's not exactly falling off a log simple. compared to what is required here, which are the, how I, I've got no problem getting this to work right. So that's how it goes. That's the difference, and that's the step that I need to do next, I guess, to properly vet this. So this chart has nothing to do with the system, except that these custom indicators that I created accurately represent the levels which the rules use. And I use the word rules because that's what IRT says, depth finding rules, trading rules, so I'll stick with when in Rome. Other than that, it has, and these are just signal markers, also to do with, tied to the rules, essentially tied to these flags. So what happens when I send this system to the chart is it just graphically represents the trades like this. Now, I've turned off the profit target and the stops because I don't need to know that. I know what they are, and I just want to see the graphic representation. But if you wanted to turn those on, they look like this. Well, they will look like that if I get this. Come on. They'll look like that. So if I wanted to see T1 and I wanted to see T3, the stops, T2, whatever. There they are. So there's the stops and there's T1, or I could make T2 or whatever else you want to put. So that's how those would be graphed. And I don't like them because it draws these lines all over everywhere. Until it meets the next trade, it continues these lines. So I just keep them off. But that'll give you, that's how I approach this and how I use it. So how I do the step between simulated backtest type trading and live trading to forward test, when I see a signal fire over here, this is normal, not currently, but normal. When I see a signal fire over here for a trade, I manually replicate that right over here on Bookmap with normal order, using the bracket orders that I have set up, the same as I have the bracket orders set up over here on the IRT. And I go through all that setup process in the pre-market every morning between 8 and 8:30. Every morning every trading day morning I start the pre-market with, setup and take a look at the news, take a look at the reports, take a look at the pre-market, set up IRT, set up Bookmap, and then the stream is live from 8 o'clock in the morning until 1500 every afternoon. And it is completely transparent and fully accountable. I take no trades off of the stream. That's why the stream is so long. I learned early on that I, started the stream. I thought, 2 hours has got to be enough. And then I came back into the office and I noticed this trade was getting ready that I wanted to enter a trade. And I had made a commitment not to do so. So I had a choice. I could break my commitment not to take a trade off the stream, or I could take the trade and, not take the trade. So I didn't take the trade, and hence I now stream 7 hours every day. I try to keep a real accurate chapter history list. So, and that's published, or that's posted into the description of each stream, because I don't know, I'm sure as hell not going to sit and listen to 7 hours. So, I want to have those stream markers as accurate as I can. Anyway, back to the backtesting. So, this is the live market. Now, the real meat and potatoes of how this evolved and why I continue it, especially in IRT. This is only a 3-rule system. But just look at the rules and the specificity of those rules on one, two, three, 4 trades today. Well, no, not trades. The rules, but didn't produce a trade. Rules, but didn't produce a trade. 2 trades today. All right. I could have sworn when we looked at that, there was 3 trades there. Am I crazy? I could have sworn when I started there was 3 of those. Anyway, let's look. So my point is, if you want to be accurate about this, and you must be accurate, you must be precise about the rules when you're trying to capture these instances or occurrences of the setup for your data set and your analysis. You can't have the rules vary. It's got each one has got to be identically the same, otherwise it's not statistically significant. So there you go. I worked out quite early on it was impossible for me to do that manually, even with creating. The reason I created this chart was to try to help do that, and I thought, there's not going to happen. So the next step is backtest. Now, instrument, contracts, session, reports I want to see, number of days back. Let's backtest 500 days. Imagine that you're going to manually try to scroll back through and precisely capture each rule, each trade, and then mark all that down accurately, or record it accurately over every 1 minute bar, over every trading day, looking back 500 days, which is about 498 trading days. I can tell you just off the top of my head from having done this a lot, that's over 200,000 bars. Couldn't do it. Watch this. There's the back test. 498 days, 223,300, 525 bars. Took 9 seconds. The computer evaluated every one of these rules, every 1 minute bar, for 498 days or 223,525 bars, and it took 9 seconds to do so. Phenomenal, isn't it? It is to me. So that now we have starting to get some meaningful data for our system, my system. $13,000, 726 trades, long, short. Capital required, maximum favorable excursion of $1.85 per day. Maximum adverse excursions, minus $45 per day. Profit per day. And then let's look over here. $444 winning trades. Average winning trade is $33.48. The reason this doesn't say $70 or $75 is because we are at 12 ticks. The system right here is set up to scale. Yeah. 12 tick stop, 12 tick T1, 48 tick T2. At 12 ticks, it triggers to break even, or entry, which is break even plus entry, and if it's 0, it goes to entry. So when it reaches T1, the system automatically trails to entry. Set that up any way you want. There's 139 stops at an average of $12.46 a stop. There's 29 consecutive winners and 5 consecutive stops. And here's a real interesting report. There is every one of the 700 and however many trades it was, 725 or something. There's every trade, the moment, the date, second, hour and minute that you entered it, the type of entry, and the 2 exit types for each of the 2 contracts. the name, what happened, the action, obviously the instrument, the prices, and the profit outcome for every single trade. And you see that not very many of them make it to T2. There's a long T1 and a long T2, 75 bucks. Most of them are getting out just a little over the at the trail. Anyway, that's meaningful data that you can really lean on to build a system or not. That's called a vetted trade. Now, the next step I take, which is probably, I think it's important, is over here. This is, every one of these lines is a back test. And here are some of the most recent I've done. Everything about the trade, the stop, the target, the trail or not, the ATR, the trading window, the number of days, total trades, total winning trades, winner amount, total losers, loser amount, scratch, win rate, loss rate, expectancy, R multiple, risk to reward originally, profit factor, MFE, MAE, or MAE, MFE, MAE, consecutive winners and losers, profit, longs, shorts, profit, commissions, and net. And then you can, if you're interested, it also, one more report there will also put out Sharp and Saltino, standard deviation numbers, everything, any kind of a number you want to have. I believe that with that kind of data, I have confidence to take the trade and take every one of them. Now, what happened in the recent days that I have to get to the bottom of, I exceeded the consecutive losers for the system. As long as you're within parameters across all of this, you don't make any changes. When you are out of parameter, then you need to make a change. And I have exceeded the consecutive losses, so I need to figure out what happened to the system, to the market, something. And that's where the weak link comes into my system in terms of me actually taking the trade, because if you backtest this, you're still going to get good numbers. But they differ surprisingly from my actual numbers. And that could be something as minute as just entry location, and a stop by one or two ticks. But the bottom line is, I'm not going to stand here and bleed to death by 100 cuts, I also have a systematic and method for moving up, scaling up from micros to minis. That's this thing. Anyway. So that's the back testing as set up. I'm also testing other back tests, doing other back tests, looking for other setups. There's been so much tout about opening range trades or orb trades, whether you fade them or go with the typical one or what, all that kind of stuff. So I thought, let me see if any of that's even remotely true or valid or just complete clickbait for new subs. And I'm sorry to say it appears to be nothing but just clickbait for new subs, because I've tested out a lot of them with all, and by the way, that one rule with the main where I can add and change all the different kinds of parameters and the opening range width and time and all that stuff. None of them backtest out. I'll show you. Actually, I know it's Friday afternoon, isn't it? None of them. Let's look at this one. This is an opening range fade. This is the last one I did. Now, This is a little different. It's the guy who puts this out, the Swedish guy, who's been trading a long time, was Dr. David Paul, was the guy who mentored and trained Tom the Trader, Best Loser Wins, and also this young boy. So he says, Dr. Paul's dead, so how are you gonna check? Anyway, he says this is a really good trade that has made him money consistently, that he was in the Swedish stock trading championship in 2010, and the guy that beat him used this thing and blah, 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 blah. Anyway, this is it coded exactly. Very simple. 15-minute opening range. The idea is based on a engineered liquidity, which does definitely happen. If a large outfit has, if I can find an actual winning description of it, I'd show you. Let's see if we can find one. None of these are, oh, that's only 4 days, okay. Well, let me just pick one now. Oh, here's kind of a winner, I guess. They have a big order that they want to execute to the short side, sell order. So they engineer a big emotional first candle, and then it breaks out because all the other traders jump on board, FOMO, and you fade that, and you take your profits down here. Now the way he sets it up is it's a 15-minute opening range. The first candle, you must trade opposite the first candle. In other words, fade it. It needs to be 25% or more of the average true daily range for the instrument over 14-day, average true range, which I also put in here. And then the way he does this is he divides this by, so the first target would be at the 38% Fibonacci from the entry. I don't like Fibonacci, but it's easy to, I don't even use them, but it's easy to do with percentages, right? It's 38%. And then if you want a second target, it could be the other side or wherever you want it to be. And the stop is half of the first profit target. So instead of, if it's, let's say this is 30 or 40%, it's not, let's say it's 40%, in the case it's 39%, 38.2, whatever. The stop is then above the entry, obviously, and it's for half of that. So you have a 2-to-1 risk reward to your first take profit. So this would be 19% of the width. So you're setting the profit target and the stop loss dynamically off of the width of the opening range. So this stuff sounded a little bit reasonable to me. So I coded this up, and now watch this. 500 days. Okay. Ready? Well, you lost $500. Over 500 days and 100 trades. As far as I'm concerned, it's useless. I will work on it a bit more to be sure I didn't miss something. 75 losses, 29 wins, 104, that looks about right. You see, if the winners and the losers don't total the total number of trades, the balance has got to be scratch. But in this case, there is no possibility for a scratch. There's either a win or a loss. There's no scaling, so there you go. largest winning trade was average winner's $115, average loser's $50. Okay, that's a 2 to 1. So that's right. There's a 2.29 essentially win to loss ratio. You got a 27% win rate. It sucks. As far as I'm concerned, that was just a big waste of my time. I wish I could code this stuff faster. Because, and then there are others, you know, that I've seen from different people that people have told me about or pointed me to or whatever else. And it's a place to start. So that's the back testing. Now we're going to do the market wrap at the bottom of the hour here, and I'm going to get a drink. Not that kind of drink yet, but, you know, pretty quick. So there you go. And okay, market wrap. We'll just go right on, I guess. Yeah, market wrap. The daily wrap up. Well, there we go. Back through it again. Oh, did we get another signal? No, we didn't. Okay. Clearly, in hindsight, which is the stock and trade of most internet guru-y types, and unfortunately Discord or stream people, it's the stock and trade. Anybody can do it. I knew it was the bottom here, so we turned around because I knew we were going to close that gap, and I got long, and up here we got, you know, whatever kind of dribble they want to come out with. The thing that jumps out to me here in this day, and I would not be able to know, I haven't thought about how I would approach this as a trade, but mean reversion was it, off the top especially. Short, boom, short, boom, short, boom, short, boom. All of those are mean reversion trades. Because, well, these are not, because the mean has come up here. Now, these fly in the face of VPOC migration trades, which a lot of people talk about, and which I have no success with. But that's what we've done today. We did close the gap. There was the gap high and there was the gap low. We opened in a gap down here at the open, traded down a little bit, closed the gap. And now we're trading just above the previous POC. We never did reach the overnight volume point of control, which is a big tell to me. Here's the same day in the MES, MNQ, and the micro composite chart. Now, if you're not more here in the pre-market, all of my IRT charts in the header is the chart name, meaningless to you, the instrument, the day type or periodicity, and the session. Chart type, periodicity, and session. This is a micro composite, or this is the market profile chart for just the ES. I don't go between micro and regular and mini. It's just the mini. Let's see what we've done for volume. Still over 100%. We started out about 149. Now we're down to $1.17, and this is a 2.5% ATR over 1 minute. Let's just do this out of curiosity here. See how close it is to about 80. It should be about 88 ticks. 87.75. Pretty close. I just wanted to make sure the value I was using was the same or was close on that that strategy that I was just showing you. So there you are. Now the micro composite is my high time frame chart. RTH session only. These are daily candlesticks. Wherever they overlap, I draw a volume profile around them. So we had the gap up yesterday, or I'm sorry, day before yesterday, and no remote idea to close it. So that was an outlier. This is where the old profile stops. Okay, yesterday we did this, so overlap, pull them together. Down here, overlap, pull them together. So as of tonight, this will be included in this profile, which generates a micro composite volume profile. High and low volume nodes, which are these red and green lines here, they push automatically to bookmap, as do the session prices. And they are over here. This is where I enter the POCs and stuff, and these are the session prices. And these are the session prices, and these are the high and low volume nodes. Okay, so let's look at the important stuff now. The future. Ooh, baby, let's look at the future, huh? Doesn't that sound fun? Well, first of all, we got to get the future started here. I noticed that this thing is continually twirling up here, which makes me think it's continually burning resources, and I don't like that, so I shut that one off. This is my old standby, investing.com. Both of my news sources are free. That's why there's all these ads. You can filter them any way you want. The reason I keep them free is so that anybody that comes by here can have access to those resources without having to pay something. This was the big event of the morning. This was the PPI. It was a miss. That's why we were way down. And earnings is a pretty big list, but nothing critical. These are all the earnings for the day, if you can believe that. Something about investing.com which I like. Notice how the event titles change to a URL. If you don't know what the GDP or the PPI is, you can click that and go see all the who puts it out, and what all the past results were, etc. And another feature of investing.com I like is you will never see any non-traditional economic event reflected in the calendar here, except something like the State of the Union or whatever. Now, that's good for me because I know what's really economic stuff and what one day will be again back to where we always used to be. I know that non-farm payroll is going to be out the first Friday of every month at 7:30. I've known that for 30 years. This is GDP. This has been scheduled for years. We can count on that. We can make a risk mitigation plan for that. And we can protect our accounts by managing our risk. And defending or protecting your account is a trader's first priority. The other news source I use is is Financial Juice, and pretty much for the opposite reason. They pull in all these random events that are in this current environment have the potential to disrupt our auction. And I really appreciate that. So, because I am focused on risk management. So I want to know if something's going to happen that may potentially disrupt the market, the auction. That's all there is to it. No political statement at all. It's a fact. Check. And then the right side over here is more of a squawk box. And this is where we're going to see the market on close and balance here at 1450. So there, boys and girls, you have, this is also free and there's ads and all that stuff. There you have pretty much the entire wrap. I don't know what I didn't do. Football. Again with this. Let's look at next week. That's pretty important, isn't it? What's going to happen next week? Well, here's the earnings. There's the calendar events. We've got S&P PMI Global, ISM on Monday, FOMC talking Feds on Tuesday. Oh, I know why this is going to be a big one. But remember what I said about non-farm payroll the first Friday of every month? Let's look at Friday. Oh my goodness. Who knew that? How did I know that? Because that's been scheduled that way for 30 freaking years, except recently. So there you go. So this is going to be the big event that everybody will be watching for, and the GDP. That's Europe. Back up here to jobless claims. Tuesday, and then earnings will continue, but the Mag 7 is over because NVIDIA reported last Wednesday afternoon, this past Wednesday afternoon, and I think that's the last of the Mag 7, I think. Okay, there you go. Now you're up to speed. Now I remembered all that stuff. And we'll wait for the market on close imbalance. In keeping with my risk management and to preserve my account, no trades, because until I sort out what is wrong with what has changed negatively with the performance that the system was having, I'm not putting my account at risk and, burning money. I'm not going to die by 1,000 ticks. So that's that. I know it's not very exciting streaming or any of that stuff, but it's the truth. And it's the way I believe a serious trader who wants to have trading as a business, not a video game or gambling or an adrenaline rush, all of which are fine. If that's, if you've got a nice income and you want to have fun, if you like to go to Vegas, or if you can't get to Vegas today, so you want to sit down and throw trades at the futures market, go ahead. Great for you. Lucky guy. Mucho luckio. So what do we have? 5 more minutos here, huh? We've got about 1.5 minutes for the market on close and balance. There we go. That was the market, the mover right there. Market on close imbalance. That's actually more typical to the way we used to get the movement. Lately, it's just been, you had to squint to see the damn thing had even come out. Let's see what we getting. Hey, Lucky. What's up, buddy? Whoa, okay. Well, here we go. 2,720,000,000 S&P 500 market on buy orders. Imbalance. 364 million imbalance on the MAG. On the NASDAQ 100. Dow 30 is 1,154,000,000. And the MAG 7 is 545 million sell side. So, and Trump is online right now tweeting about all kinds of stuff. So, I'm sure you're out of the market, but this is Harry's place in Canada. He was saying that he had to bungee down his Starlink because the wind was blowing off the pole. All right. What am I trying to do here? There we go. So there we have it, boys and girls. Now, let me just say the following. You need to recognize that the most critical tool you have in your trading office is you. By far. Just think about it for a minute. All the time and money we spend on screens and monitors and software and indicators and blah, 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 blah. And all of that data is taken in by your eyes, processed by your brain, and you use that information to make financial decisions that affect yourself and your family. Without you, all the rest of that crap is useless. So you need to really be aware of the fact that you are well rested, well hydrated, not on emotional tilt, fit, healthy, best you can. You need to work as harder on that as you do on, scrutinizing which refresh rate on your OLED curved hoop-de-doo is going to help you out a lot, And second, so with that in mind, when this market closes down, the cash market closes down, this old cowboy's headed for the door, and I'm going to get some walking exercise and fresh air and rest my eyes and do some squats and chase mom around the barn and, whatever it takes. Have a great weekend, and we'll take it into the close here. We got about 5 minutes now. The cash close, by the way. Remember that I stream every trading day from 8 o'clock in the morning till 1500. I start pushing start all my machines up, and the session prices are active and pushed out from 1700 on Sunday night through 1600 Friday. And if these session prices would be helpful to you, I provide them free, no problem. Just drop a like, subscribe, and drop something in the chat, and I'll hook you up with it. It's just a link that comes down from Google, all safe and sound. Yeah, there you go. Whatever I can do to help. And if you've got any ideas about strategies or comments about what I'm saying or thinking or doing, let me know. That would be a real help. Remember, this is my virtual journal. Everything that I'm watching is captured by the video, and the only way I get my thinking at the moment into this recording is my voiceover, my narration. And this is by no means my way or the highway. This is what I'm doing now and trying to evolve and develop a consistently profitable trading business. So that's all there is to it. We're going to shut this down now in 3 minutes, so I've done enough talking today. And as soon as this day is over with, I'll jump right into the trying to develop something for backtesting and analyzing these systems, which I will continue to do all weekend. Never stops. And I like it. You're going to get a closing swing into that EVPOC. there you go. Closing swing trade into the overnight volume point of control. So that is the statistic done and dusted after all day. And again, you know, I was talking about that several times throughout the day and in the pre-market. But that is meaningless unless you trade it and make money from it. That's just what I refer to as bullshit and bus tickets, you know. That's all it's worth. All right. Have yourself a wonderful weekend. Take my advice. Get outside and do something healthy for yourself. Rest your eyes. Get away from the screens. I hope you had a successful day/week. I hope me too. I did. I'm not, you know, I didn't lose a penny. I didn't make any. But I didn't lose any. Because I'm risk aware.